It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I am your host. I'm also one of the certified financial planners on the program. With me in the KFG studios, my business partner and fellow CFP, Josh Gregory, special guest, Alysia Boehner.
That's right. Hey, one of the biggest risks from not taking a comprehensive approach to your finances is your insurance getting out of sync with your actual financial situation. And this is especially a problem if you're a small business owner. So we've got insurance expert Alysia Boehner rejoining the show today to discuss common insurance coverages that you need for your small business and how to close the gaps that exist between you and your small business.
It feels like just yesterday that we started the insurance agency within KFG. It was actually almost 20 years ago.
Wow.
But it is surprising how few people take a comprehensive planning approach to their insurance and actually look at, well, here's the rest of my financial life. How do I make sure that my insurance decisions align with that? That is still a rare thing. And so you got to be working with your CFP. We're grateful to have Alysia sharing her wisdom with us today. If you have a question for the program, we'd love to hear from you. You can call or text us, 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us. And then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. Hi, Alysia.
Hey.
Good morning.
Good morning.
Welcome back. So we're wrapping up our series, which is a weird series in that it airs the first weekend of the last several months. And it's designed to focus on small businesses and small business planning. And obviously not all of you own small businesses, but a small business could still mean I've got a side hustle. I've got some side income. I make some stuff and sell it on Etsy or through eBay, something like that. All of a sudden, that's small business-y, and you've got to be aware of the ramifications of it, specifically insurance. So, Alysia, when you're talking with someone who either runs a small business or is sort of like self-employed or has some self-employed income, biggest mistakes. Let's start with the fun stuff.
Okay.
What are the common mistakes that you see?
Okay, so I think one of the biggest mistakes that I see lots of business owners making, any industry, no matter what, is they never actually pause and say, what in the world would devastate my business? What type of claim would do me in here?
Yeah. I wonder if business owners as a group are eternal optimists. As a rule of thumb, if I was going to stereotype, they went into business not to fear the boogeyman hiding around the corner or anything, but they're thinking about the positives, all the good that can happen, and when the sun is shining and the birds are chirping and the business is thriving and life is going well. But obviously, your job is to think about the risks and what could be lurking around the corner. But you're saying business owners, they don't have that as a habit.
I don't think they have it as a habit, and I don't think they really actually stop to think, okay, now what types of situations would really knock me out altogether that I couldn't operate and it would devastate the business financially? And unless you think about that question and try to ask yourself that, and it might not always be an insurance solution, right? Mm-hmm. Sometimes it's more of a risk management solution, but you can't find the answer and make sure you cover that hole if you don't know.
If you never ask the question.
If you never ask the question.
Well, I was going to joke. I mean, as soon as you start a business, that's the first question you I'm just kidding. Like, who wants to think about that? So you can't blame them, okay? But yeah, your job is chief fearmonger, right? I think we got you. That's your nameplate on your desk. I'm just kidding.
Acronym queen.
Okay,
yeah,
yes,
that too.
So yes, business owners not being aware of the risks and therefore the importance of working with the right insurance advisor, the right insurance team to point these sorts of things out, or at least have that conversation. Okay,
so number 2.
Yep.
I am sorry, new ventures and startups. I'm not trying to throw y'all into this box, but I'm gonna. Y'all.
That's twice. Okay, keep going.
You change your business 5 times in the first year. So here's the thing. Here's a good example. you got a guy who's going to do lawn care, right? He's going to mow lawns. That's awesome. He comes to me, he gets some insurance. The problem is with insurance, that guy, he gets done mowing the lawn, and you, Mike, say, hey, I got this dead tree in my backyard. I kind of, a guy that would cut that down? And the guy thinks, oh, I've got a chainsaw. I can cut that down. And you offer him $1,000. And he's like, well, that's cheaper than the $3,000 quote I got down the block. So now he's cutting trees down, and that is not even covered by his insurance, nor does his agent have any idea that he's now become a tree feller.
And then
is that the right word?
While he's up there, he's taking a look at the roof and it's like, hey, that looks, you want me to reshingle your roof for you as well? And so, okay, yeah. And well, when you're entrepreneurial, I tell you that you can't turn that off, number one. Like you're always looking at opportunities. And if you're side hustle and have some skills that, oh my goodness, are in demand right now, yeah, you're going to apply those. So the lesson then is stay in touch with your insurance agent, right? Because you don't know what could happen, especially when you're doing stuff that you think, oh, nothing bad could happen. But you want to make sure what you are doing is covered.
Right. If you're going to pivot, that's okay. Pivoting is fine, but just make sure you're keeping your agent informed of those things, and you're asking good questions to say, is this really still covered by my policy? Because you can't assume that the insurance company is just going to pay that claim. It's not likely they will if they can find a way to deny it, if it's not really something that was intended to be covered by the
Is that
policy.
especially true in this environment here, where insurance companies, it seems like they're all losing money. And so are they all trying to deny claims that aren't explicitly covered in the policy? They're not going to color outside the lines to benefit you, give you the benefit of the doubt, that kind of thing.
It definitely feels that way as an agency or an agent, that in the harder markets, when money is tight for them and they're being pressured to control costs, that they're going to say, okay, if it's not covered, we're not paying it. And in times, they might look for coverage, right? If they can, because they want the goodwill. They really do want the goodwill of helping clients, and they want to find coverage, generally speaking, if they can. But they might not try so hard if they're all losing money.
Okay, so let me give you a scenario. You mentioned the cutting trees down, because I've been doing a lot of that at my house. But
not for an income.
Yeah, correct. And there were a few especially risky trees where I wanted a professional, someone that could go climb the tree, take it down in pieces, that sort of thing. But I never asked them, hey, are you insured? Are you bonded or anything like that? I just kind of assumed, well, they're in the business of doing it. Is that safe for me to assume? Or, what happens if they drop that tree, someone gets hurt, it falls on the house, whatever, and then their insurance company doesn't cover? Is it now a battle with my own homeowners, or are we trying to sort things out financially just between the two of us as private parties? How does that work?
So definitely your homeowner's insurance policy would come into play, but they're going to try to subrogate against that other party, which just means they're going to go after that other party to try to recoup the funds from someone.
Yeah.
So if they think there's a way they can get that money back, definitely if there's another policy, they're going to be looking for it. But Joshua Gregory, I thought I taught you better. You should always be asking for proof of insurance for something
who does
like that.
that, really?
I was actually going to ask you, just to confirm on the radio, on the record. So you should be asking, you're licensed, bonded, you're insured, right? That's a question that you need to ask.
Definitely if it's something big.
I mean, because
roof.
So here's the thing. I mean, right now, those skills seem like they're in high demand, short supply. And guess what? They're way more expensive than what you expected or what they were a couple years ago anyway. And so, yeah, you might be tempted to shortcut that, but you're saying absolutely, don't.
I'm saying don't, and I'm saying this is also a mistake that business owners make, because when you get into subcontractor relationships where now you're having a sub perform work for you, they should really be making sure every single one of those subcontractors have their own insurance as well. So it's not just a problem for us as individuals, going into the market to find a service, but it's also a business to business problem we have too. And the problem with that is the insurance company, if that subcontractor doesn't have insurance, they're piggybacking off of you.
Yeah.
So now you're covering not just your exposure, you're covering their exposure and their poor work, and you might not be doing so intentionally. So
All right. Well, we're already getting into some stuff that I didn't anticipate us getting into, but this is good. I want to pick back up on other mistakes that you might see from small business owners or those with self-employment income. But then we're going to get into, well, then what coverage do you need? If you are running a small business or doing something out of the house, have a side hustle, what coverage do you need, and how do you make sure that there isn't a gap between your personal stuff and business stuff? So we've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern Time every Saturday morning, also on podcast at the same time, but also on a couple local radio stations at the same time, which is why it's broken up the way that it is. It's as long as it is. That's why there's banter. That's a talk show. But if you're on YouTube saying, no, I want something more direct for me, you're in luck. We have Next Wise Step videos that air all throughout the work week, taking one financial concept, applying it directly to your financial life, talking right to you, 8 minutes, 10 minutes, 12 minutes, however quickly I can get it out and deliver the message to you. So make sure you hit that subscribe button, turn on notifications so you're made aware every time we drop new content. If you like the content, like the content, and leave questions below as well. Thank you. Okay, you want to move her microphone?
Yeah, like
A little closer.
in your face.
We good there? Are we good?
That's perfect for me.
Yeah.
Yeah, that's
There you go.
Mike always wants mine like this
There
for
you
some
go.
reason.
Yeah. Perfect. Perfect. Good job, Wilson.
Yep, that's right.
That's a good old reference that most people don't know.
That's because we're old.
Home Improvement.
I know, Home Improvement, and now it's probably politicized and blah. But you go check it out. Go check out.
Is that
who-
guy still alive? I feel like maybe I have this distant memory that maybe he passed away.
Yeah, I think you're right. I have that memory as well. But it's funny. We wouldn't know. I wouldn't. If he could be my neighbor, I'd have no idea.
That's right.
Because you only get to see his eyes. All right. I wonder how much he got paid for that. Like he had lines, so you had to act a little bit, but
He was basically a forehead model.
It was a forehead.
all right. So do you have a couple more mistakes you'd want to hit?
Sure.
Let's do that, and then we can get into common insurance packages. This is good. It's good. All right, here we go. If you run a small business, or I guess more likely have some self-employment income, side hustle, whatever, how do you make sure that you fill in the gaps that might exist between your personal insurance and this business insurance as well? We're talking about that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Josh Gregory and special guest Alysia Boehner. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at, we are there as well. Search the Wise Money Show. All right, Alysia, we're really still just kicking it off. The mistakes that you see when someone comes in and says, hey, I need some insurance. I've just started doing this thing on the side. Or I quit my day job and I'm trying to get this business started or something like that. So what are some other mistakes that you see?
I think some other mistakes I see. So if people own a building, a lot of business owners who own their building don't really understand co-insurance and what that means for their building. And that a claim, in the event of a claim, can mean a penalty that's applied to that claim. They might shorten the amount they're going to pay at the time of the claim if you're not insuring the building correctly if you have co-insurance. So just making sure you've talked to your agent about that.
Okay, so you're talking about a situation where I have a building that my business operates out of, and there's a major claim. Let's say there was a fire and the thing just burned to the ground. Co-insurance comes into play when basically they kind of pause and ask the question, did you even have this building insured enough? Is that right?
That's right. So you pick a percentage. Most people will choose like 80 or 90%, and then it's a mathematical equation, because we're nerds. It's how much did you have over how much should you have had at the time of the claim, and they do the math division problem. And if you're not at that 80%, then you're in the penalty state if you selected 80%. Now, you can suspend that. So some agents will put this endorsement on called agreed value, and that will suspend the co-insurance penalty. So that's a way to prevent that altogether, but you're going to be charged for it. So, it's a give and take. Do you want to pay the premium or just make sure you're keeping your building limit up to date?
Okay, yeah, I could see how this would be a problem in this day and age, especially because if I bought that building 10 years ago for $250,000 and I insured it, I said I wanted 80% coverage at least. That was my minimum threshold that you're talking about. But the value of that building, or the cost to replace that building, I should say, has run up so much because of inflation or the unavailability of workers or materials or anything like that. And maybe it's doubled in value. What if it's $500,000 and I'm only at $300,000 of coverage? That's only a 60% coverage. So I'm underwater now compared to what I said I would be. So how does that play out? Like what is the penalty to me? Like how does that work?
So they're going to do the mathematical equation. So like say at the time of the claim, they do the math division problem and you're at 50% and your loss is $50,000, you're getting $25,000.
Wow. So they apply that rate, that percentage or ratio to the loss, and that's what they're going to pay out.
Correct. Now, just to kind of hit the inflation issue, a lot of policies do have what we call inflation guard baked into it, which means maybe there's 2% or 4% building uptick every year based on inflation. So that can help with that.
Well, I feel like that inflation guard is one of the things that we hear people gripe about, actually.
Oh, interesting.
Right? Because it's just another way that the price just keeps on going up or whatever. And you're saying, well, that's actually there to protect you from getting into one of these co-insurance situations.
Yeah.
Okay. That's helpful to understand.
I'm curious, two things, because I actually want to apply this personally as well. I know we're talking mostly about commercial stuff, but I want to apply this personally. How's this work for your house? Right. So is there this penalty zone as well, or just speak to that?
So there is, most homeowners policies, it's an 80% co-insurance. In the homeowners world, there's less wiggle room because our companies make us insure to value.
Yep.
So they're requiring that we input the details about your home and that we insure it to value. But the problem becomes, this is where your agent is so important, because as an agent, I can put whatever in the world I want in there, right? And if I never show it to you, Mike, and you don't look at it and make sure it's accurate, then you're still not insured correctly and you could have a problem at the time of a claim. Wow. So, but there should be more protection against that. So you should ask. That's the key takeaway.
Okay.
When you're buying homeowners insurance, ask to see that replacement cost estimator. Don't just assume that the number they gave you is correct. Ask to see it. They should be able to show you those details.
That's
Boy,
interesting.
That is interesting because sometimes when we're helping someone put the right insurance package in place, we can see what another agent's work was. And they're basically insuring the house as if it's a really inexpensive house to replace or whatever. And who knows how they came up with the number. If they didn't use an actual calculator to estimate, well, here's what that amount of ceramic flooring and hardwood flooring and this age of roof and all these amenities and everything to come up with a replacement cost, then they're coming up with that number somewhere else. And if it's not where it should be, that's where you could get into potentially a co-insurance issue even on a house.
And more often, every carrier has some sort of program that you're using. And the beauty is there's so much public data available. So they're likely tapping into what the square footage is of that property. But here's the problem. They're going to use these default assumptions. You could have really inexpensive cabinets, laminate countertops, or you could have all granite and hardwood custom kitchen. And that is a very different rebuild value, and public records will not give you that.
Right.
Some photos on the internet will help, but sometimes those are out of date and you just don't know.
Yeah, that was the other thing I was going to ask, both commercial but also personal. What value are we talking about here? Because you've mentioned value a few times and just want to just level the playing field. Are you talking market value, what you could sell it for?
No.
Right.
No. Rebuild value. So our little phrase is like, kind, and quality. We don't want you to be better. We don't want you to be worse. We just want to put you back the way you were. And all you people who tell me, but I don't need that big of a house anymore. Well, I'm sorry that's the house you chose. That's the house you have to insure.
Right.
And so it's going to be really hard for us to make a case that now you would downsize to 1,000 square foot because at the time of the claim, they're contractually obligated to put you back into the house you're in now.
So people are hoping that they can get a big payout from the insurance company, build a smaller house, and pocket the difference.
And so sometimes you can do that, but it's more about, well, I just don't want to insure my house for this much because I think this is too much and I wouldn't rebuild this house. Well, but that's the house you live in, and that's the house that the company has to rebuild for you.
And certainly if you have a mortgage against that house, that's the one that you're obligated to protect for the lender as well.
Right, but there is some flexibility in what you said where they're going to pay you to rebuild that house, and then you're going to have some flexibility in how you want to use those funds if you want to change things up a bit.
Interesting.
Okay, so let's circle back to small business or having some self-employed income. What's the typical boilerplate insurance coverage? Is there one? Is there like, hey, as soon as you have some self-employed income, you need to have professional liability, or it's packaged together in a BOP or whatever? Can you explain some of that?
So I would say there's key components, and how you get it can differ. But most businesses are going to need some form of general liability insurance. Within the term general liability, that covers a whole bunch of different liability type exposures.
A slip and fall, a lawsuit, product issues.
Product liability, completed operations if you're a service-based business. Usually you'll get something called damage to premises rented, right? If I'm renting my space and I leave a candle burning and burn the building down, that landlord's going to want me to be paying for some of that damage. So that's their medical payments, personal and advertising injury, so like libel, slander, copyright infringement. All of those are kind of baked into a standard general liability
all
policy.
The different types of lawsuits that could be flying at you.
You can't say all.
Yeah, you're right.
Thank you.
Can't say all.
Many of them.
Many.
So,
Commercial property.
So, okay, and then if you have property, then, you said personal property.
Commercial.
Okay, got it.
Yep, commercial property's next. You're going to want some sort of coverage for your commercial business-owned property. That's stuff in your building, but how we insure stuff that stays in one place is different than how we insure stuff that moves about. What about belongings of others, right? If you're a screen printer and I'm sending all of my company's shirts to you and you have a fire and you've got thousands of dollars of apparel for someone else, you're going to need coverage for that. So you have to think about the types of things that could happen for each business.
That's good.
Okay, so you're saying like baseline, some sort of liability protection, and then if you own or rent someone else's space, so if you own a commercial building or rent commercial, then you're going to need some sort of property coverage as well. I want to get into the Etsy sort of like you're doing something out of the house as well. Does that mean you need some of these insurances? So I want to pick that back up, and then the gap between personal and kind of small business stuff. So we're going to pick all that back up here on the Wise Money Show with Korhorn Financial Group. All right, good stuff. Okay, I didn't know that there was co-insurance on the house. I thought it was, hey, you're out of luck. You insured it for this. There's some inflation protection. It brought it up to this. For the normal company, I just figured, okay, if it costs $700 to rebuild, you've got $500 of coverage. You're out.
Well, and then you've got guaranteed replacement costs, and
Right.
you've got
Are most companies doing
increased cost dwelling, which is like a percentage, which is
Is that
usually
the
like
25% more?
Yeah, so there's all these other things you can get, which is what most good agents will do to make sure you're protected from that.
in some sort of package, some sort of add-on package?
Well, as part of your homeowner's insurance.
Okay.
Right, because there's different levels of homeowners insurance that you can be buying, and if you're buying the right coverage, then it'll put your life back together if that fire does happen at your house.
Yeah.
Okay.
But not everybody sells that, right?
I feel like most do a pretty good job on the big things.
Mm-hmm.
But
So they're not going to mess up trying to save a few bucks on your homeowner's insurance and cut some corners or whatever.
it's too much E&O for them.
Yeah.
All right, we'll pick it right back up. What are some of the trends going on in the commercial insurance world? We know the trends going on in personal insurance. Costs are up. People are looking to cut coverages. We're going to talk through that here in just a second. But same thing happening with businesses. What do you need to look out for? We're helping with that more right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFT studios, Josh Gregory, special guest Alysia Boehner. Every episode of the Wise Money Show's on podcast. Wherever you listen to podcasts, just search the Wise Money Show. Subscribe to it there or follow us there. Rate the program there as well. We appreciate that feedback. Thank you. All right. So, Alysia, we're talking about this mixture of, well, personal insurance and business insurance. We're going to get to the gap here in just a second. But part of that gap is it feels like I have a quota every year that for either Cindy's birthday or Christmas, I have to get one thing off of Etsy. And I don't know, like, I don't feel that responsibility, but that is eventually what happens. Like, oh, she's, all the kids are into sports, so we need something, I should get her a sweatshirt that says softball on it or something like that. So this year, for Christmas, we actually, I got some stuff off of Etsy, and the gal did a fantastic job, communicated well, and did awesome. But I'm certain she's running this thing out of the house, even though she had all the little, like, niceties of a boutique. I'm certain she's running it out of her house. How do you ensure that? This was a personalized clothing attire, like, item. And does she need liability insurance? Does she get some sort of coverage if she's posting a store on Etsy? Or how does this work?
So it just depends on how much income she's earning.
Okay.
So it depends if it's full-time occupation, incidental, part-time side hustle. It depends on what kind of endorsements her homeowner's insurance has available. So you can add some incidental business coverage, and that might cover up to a certain dollar amount of business personal property, and it's going to extend your premises liability that you have. But if you wanted to make sure you had products and completed operations, right, if she's worried about that product that she's selling to you hurting you or injuring you in some way, that's not really what the homeowner's incidental business is intended to cover.
Right.
Mm-hmm.
So you have to kind of find that distinction of what are you really doing? Again, what could ruin my business? What types of claims might happen that could injure someone? And do I have the right insurance for those things?
That's a tricky decision for a new business to figure out too, because how many of those sweatshirts do you have to sell before you're generating enough revenue to even cover the insurance premiums, right?
Exactly.
I mean, you'd go negative on your business pretty quick if your first year is spent just trying to get up to enough revenue to cover insurance itself. But this is one of the reasons why I think it really does become a risk management conversation, which, not to turn the conversation back to personal financial planning, but that is what this show is about. And whoever is running the Etsy business out of their house, they're doing so as an extra family income, right? Mm-hmm. It's meant to be an addition or some sort of a lift to their family finances, help them reach their goals, that kind of thing. And the last thing that you want is that Etsy business to turn into a nightmare that actually sends your financial life spiraling in the wrong direction.
Right. And it is so hard. I feel terrible for small business owners because, number one, the industry doesn't like you. They don't like dabblers. They don't really know what you know or if you're even qualified to be doing what you're doing. Insurance companies always go to the absolute most terrible scenario that could ever happen. And that's who you are. And you're sitting in that box. And so you're already kind of painted into this group of people that is very risky in their mind.
So you need an insurance agent and a team. And I don't know. I mean, our team, again, we do comprehensive financial planning, and we've got a group of professionals that have different specialties as well that we all collaborate with. We love small businesses. We love serving small businesses. And so that's who you want on your side. So what about contractor? We also lumped them into this small business category during this series that, listen, you're about to retire and your employer says, gosh, your skill set is so great. Can we just pay you as a contractor for a couple of years and you stay on and do some project work for us? In that sense, you're now self-employed. Do you need any insurance?
What are you doing?
Okay.
Right? What are you doing? In a lot of cases with a contractor, if it's like a professional, you might be able to pick up professional liability coverage, and that genuinely could be the bulk of your exposure, is your errors and omissions or professional liability exposure. But sometimes you can't get that without the general liability. So you might have to get the two together in a bundle to make sure you're covered for that. Sometimes whoever's hiring you may be able to add you onto their insurance and cover you under their policy if that's the nature of the relationship and it's very important to them. So you just need to talk to that person and try to figure out the best way to solve that problem. But if you're performing a service, you need some sort of general liability in my
It's
personal
a really good point, though, to think about that former employer who's now, you're contracting with them, you're doing some consulting work, to piggyback on their policy and get yourself named in their policy, right?
Right. And we've had situations where we've had clients who had 1099 folks that they just were really passionate about and they wanted to insure them, but they weren't big enough to have their own insurance yet, right? All these things we're talking about, the struggle. And he said, no, I want to cover these guys. Okay. Well, I had to call the carrier and have a conversation and try to figure out how to make it work for him. But we had the conversation and he was smart. He came to me so that we could have the discussion so that we could figure out how to make it work for him.
That's right. And if you're not the employer in this story, you're the contractor. The other thing to keep in mind is that the point of having the insurance is to mitigate risk, and there are other things that you can do as well, add extra layers of protection that may be very inexpensive. We did a show recently about how you structure the entity that you're operating under. Do you put an LLC in place for that consulting business just to limit some of the liability that way? So think of this as something to coordinate with your certified financial planner, with your insurance advisor, maybe with your attorney as well. But you're looking at, what is my exposure? How do I make sure that I eliminate or mitigate as much of this risk as possible, so I can just go about doing my business within this consulting work or whatever, and not worry, right?
Yeah, and to kind of piggyback off of what you said, it is so important to make sure those people are working together. Because if you do not, your accountant is going to say, or your attorney, get an LLC, put your vehicle in the name of the LLC for the tax deduction. And you're going to come to me and you're going to say, okay, how much is the auto insurance? And I'm going to say, well, here's your new bill because you just moved from personal auto insurance policy and now you have to get a commercial auto insurance policy, which might not always be the case. But even if you don't have to do that, they may require what's called a leaseback agreement. And now you're marching back to the attorney and you're saying, okay, I need you to draw up this leaseback agreement that I'm leasing it from myself personally to my business.
Yeah.
And so we're not looking at the real, what's the net savings in the end? You have to have that conversation.
Yeah. If your CPA is looking at it purely from a tax standpoint and not recognizing that in pursuit of that tax saving, you're going to go spend way more on insurance or complicate your life, that sort of thing. So I agree with you. Making sure that the professionals in your life are collaborating together, that's key.
Okay, so that's a great segue, because I want to go back to the very first question, which was, hey, what are some of the common mistakes? I thought you were going to say, and maybe you knew this was on the agenda, so you avoided it. I thought you were going to say, a lot of small business owners, there is a gap between covering their business and covering them personally. And as certified financial planners, when we're helping small businesses, that is sort of the number one thing. When people come in and they have a small business, I want our team to take a look at their insurance to say, well, are there any gaps here in coverage? So what are some of those types of gaps, some of those issues, or even scenarios where, yeah, we had this situation?
I think it's more common that people just assume that something will be covered by their homeowner's insurance. They falsely make that assumption. So as soon as you start operating a business from your property and it's the same parcel of land that your home is on, there is a business exclusion on almost every homeowner's policy, and they can deny a claim. Will they? Well, rub the magic 8 ball, right?
Right.
I don't know if they're going to pay it.
If you're cutting hair in a side room of your house and you have customers showing up, there's a slip and fall that occurs. Normally, if people are showing up for Thanksgiving dinner and there's a slip and fall, that's what your homeowner's insurance would be there for. But if it's a customer and now this is business related, you're saying that may be explicitly excluded from your policy entirely.
Correct. And then there's the problem that on the application, almost every homeowner's application anywhere will say, is there any business conducted from the premises? If you don't answer that, or if you say no, and there is a business, and they think that you were operating that business at the time of the claim, they can deny any and every loss that they want, because they can say,
you lied, basically.
Well, not even just that, but we would have never written this home. Had we known that you had this business, we never would have insured you in the first place.
That makes me feel good. All right. We're going to pick that back up. More to come here with Alysia Boehner, all of us. All right. More to come here on the Wise Money Show with Korhorn Financial Group. All right. didn't know exactly how to transition that one. So set a choice. That's what I do. If I don't know how to transition, you throw me off. I'm going to say it 2 or 3 times. There we go.
Man.
Yeah.
I love throwing you off.
What's that?
What if you're a photographer and you do stuff off-site, but you're editing photos?
Your camera equipment isn't going to be covered by your homeowner's insurance.
So
So,
you're
if
just-
you've got all that expensive camera equipment, you're using it to earn an income, you need incidental business insurance to at least cover your property, or you need to get inland marine to cover your equipment. And don't get me started on drones.
Are those your favorite? It sounds
what-
like.
Okay, so wait a second though. What about personally? Right? We just got through spring break. We're heading into summer, and these kids, these teenagers want drones.
Drones. You
So
guys.
like on your homeowner's insurance, is there any coverage there if you
I mean,
crash that thing
you
into
need
something?
to ask. No, you can't. Those things get tricky because people use them for insidious purposes.
Okay, now let's keep it clean. It crashes into something, and like if you break your drone,
And you know
okay,
you're not
that's on
allowed to
you.
use it within a certain airspace too, right?
Oh,
like
yeah.
when we lived in South Bend, we couldn't have a drone technically legally.
Because you're always in someone else's airspace.
No, because we lived close to the airport.
Oh.
Oh, okay.
So if you're
Yeah.
within a certain number of miles of an airport, you're not even supposed to be using it. But you can be sued if somebody feels that you're using that for a purpose, whether it was intentional or unintentional. You can still get pulled into a lawsuit for it. So you should ask.
Yeah,
Kind of like
interesting.
the little motorized carts. That was the big deal for
Oh,
a while.
yeah,
You're
yeah.
driving that around your neighborhood. Well, it's not on your property anymore. Now it's off-premises liability exposure. All these silly things.
Do I
Okay.
need to tell you about the side-by-side that we bought that does sometimes venture off the property?
Yes, Josh.
Okay, so where do we pick it back up? We want to get to
Someday we'll talk about that.
the deer question.
Call Janet.
Anything else? I feel like there's one sort of self-employed situation that we have not talked about, and I was trying to
Auto?
take us there. Well, okay, so there's 2.
Okay.
Yeah, so I have a business vehicle that I use. The other one I was going to say is for rentals.
I'm so tired of
I know. Okay, let's hit those, and
We
if
talked about them every time.
we can, if we can,
You want new content?
Yes.
okay. So
Let's talk about Bambi.
we'll try to hit those, and then we'll get into Amy's question.
I get it now.
Yeah. All right, here we go. 4th segment, land on the plane. Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Josh Gregory, special guest insurance expert, Alysia Boehner. Every episode, as well as a lot of other content, is on the YouTube channel. Go check it out. Go to YouTube, search the Wise Money Show. Hit that subscribe button, turn on notifications so you're aware every time we drop a new talk show, which is what you're listening to right now, and a lot of the other content as well that airs all throughout the work week, so you're made aware of that. We appreciate it. All right, so Alysia, we're talking about really everything insurance, but we're mixing in a decent amount of commercial stuff. One of the topics just over the break, we said, I'm surprised we haven't talked about this yet, is you have a business vehicle. So you don't own a small business, but you have a company vehicle that you get to take home, that you drive around, whatever. So just talk about that coverage and how you make sure there aren't gaps there in insurance.
Okay, so business usage for your personal auto is probably one of the hardest things because there are many ways people use their vehicle for business purposes, and some are acceptable under a personal insurance auto policy and some are not. So you really have to be very mindful and call. If you have signage, not going to be okay. If you're hauling people as part of your occupation, never going to be okay. If you're delivering a product, probably not going to be okay. If you've got a trailer and you're hauling heavy equipment behind that trailer, again, we can get weird here with lawnmowers, right? Like lawn care service, that's a really common side hustle that takes off. That might not be okay. So you really need to check and see, does my personal auto policy know I'm doing this? Have I told them? And did they give me a business usage endorsement? Did they approve this usage under my personal auto policy to make sure you've got coverage and you don't have a problem?
Okay, so what if you have a company car through your company and you take it home personally, you drive it personally as well. So you're not insuring it, the business is insuring it, but can your spouse drive it? Can you take it on a road trip? Can you, how does that work?
Yeah, most of the time that exposure primarily is going to be covered by your employer. They're going to be the first layer of protection, but you can add like a non-owned auto type liability to your own auto insurance to cover your exposure if you were pulled into a personal type auto incident and your employer's policy denied the claim or something of that nature. You've still got your own defense coverage for you.
So how do you do that?
You just call your agent and say, hey, I've got a take-home car that I need to see about getting some liability insurance on non-owned auto. They may need to know the year, make, model, and VIN number of it, and then they can quote that out for you, and it's super inexpensive.
I was just going to say, is that...
It's cheap.
Okay.
It's kind of a no-brainer,
Hey,
really,
it's something that's cheap. Finally, I get to say something's cheap.
Oh, my goodness. All right. Any other interesting scenarios you've gotten into with business, like vehicles, either personal vehicles that people are using for business or business vehicles used in personal?
I don't know, like the whole Uber thing, right? That's a new upcoming thing that everybody's doing now. They're using their vehicle, and that's the perfect example of hauling people, where that is not typically covered by a normal auto insurance policy. A lot of carriers have hopped on that bandwagon. Now, it took them a while. We're so slow, but we made it, and we've got endorsements you can add for Uber and things like that. So just make sure you've got an auto policy that can offer that endorsement to cover that little bit of gap, and Uber's covering some of it too. So,
All right.
Interesting.
I didn't want to talk about rentals, but Alysia begged me at the break to bring up rentals. So that seems like one of the most common, I've got some small business income sort of thing. So covering your rental, whether it was originally your house, you bought a different one and you turned it into a rental or not, your homeowner's insurance, your dwelling form, blah, it just changes into a rental policy. But it needs to change. You can't keep it whatever, the HO3 or whatever, right?
Yeah, so a homeowner's policy is intended for an owner-occupant, not a tenant. So if you are renting your property to someone else and it is not you, then you need to change that policy in some way. We call it a dwelling fire, Mike.
Yeah,
even though you said dwelling. So we call it a dwelling fire. The other thing is they care about, is that a long-term tenant or a short-term tenant, right? Now we're getting into Airbnb scenarios, short-term rental exposures. We've got to figure out the right way to cover that. Some are okay with year-round short-term rental. Some say, nope, we don't want anything to do with year-round short-term rental on a dwelling fire personal policy. Now you have to go to a commercial policy form to get that coverage. So it really is, you need to be consulting your agent to make sure you're covering it the right way.
And then the liability that comes along with that, like the slip and fall or the whatever. We talked earlier about some of the common coverages you need for your small businesses. You need some professional liability. Is that already packaged into that dwelling fire?
So normally your dwelling fire does include some liability, some premises liability coverage that's going to cover that exposure. But there are some things, especially if you're doing short-term rental, that aren't covered, like theft or destruction of the property, right? That's too big of an exposure. They don't really want to assume that under the dwelling fire policy. So that's where you need to look back to, are you actually using a property management firm? Are you using a professional institution to do this? Or are you just doing it on your own? Because that professional institution, you're paying a fee, but that's why you're paying a fee, is they've got a corporate policy that's going to cover some of those other things that your dwelling fire might not.
I never realized that a property manager is also covering some, or providing some protection
like Airbnb
ultimately.
or VRBO. When you participate in one of those, yes, you're able to tap into some insurance coverage that they offer.
That's interesting.
Yeah.
So that was going to be the last thing. If you own a rental, you now are a handyman too. And so if you are performing like upkeep or maintenance on your own property, you're not going to sue yourself if you get injured. But if you hire a contractor, same thing, going back to, you want to make sure that they're license bonded, and you're probably trying to do it on the cheap, and doing it on the cheap likely means they might not be covered. And that's just something you're going to want to make sure they are.
Correct. And whenever you have a rental situation, a lot of times they will ask, who's maintaining the property? Because the carrier is going to charge you based on the assumption that this guy has insurance and he's on the hook first for some of that, and you're second. So that's important to know.
Got it. All right, we've been itching to get to this question. Josh has a very close connection to this individual. An email came into the Wise Money studio here from an alias Bambi Slayer, and so here's a question. Recently hit a deer with my relatively new vehicle, did some cosmetic damage to the front bumper turn signal. It will have to be fixed, but I need to decide whether I should turn in the claim for the $2,500 or so. The mechanic's adamant that I do that, and it won't impact my insurance rates. Blah blah blah. Husband seems to be just as convinced that we shouldn't turn it in because it's not a large claim. Can you weigh in on this? Any other details you would add there, Mister
Mr. Husband? Do I self-identify? Yes, yeah. I am the husband in this story.
Yep.
And it was me against the mechanic.
Yeah.
Because the mechanic is giving one story that I found out that what he was saying wasn't necessarily wrong historically, but it has changed recently, right? So he's got some old information that when you hit a deer, it's not considered a collision, and therefore it's not going to affect your rates. It falls under a different deductible. All of these things were true once upon a time. But even if that was true, my argument was I don't know that we should be turning this claim in, and that's because of our own insurance history. So backstory here, we had a major claim on our house last spring, and it was a flood in the basement, broken pipe, all kinds of mess, big dollars paid out by our insurance company. Now, if we ask them to pay out again, in this environment, is that a risky move to be turning in a relatively small claim under $2,500 worth of damage?
What do you think?
Okay, so one thing I never thought of about this, I know this, but you may not, you're not looked at as all policies. It's line of business specific.
Okay.
So if you've not had prior losses on your auto, one first comprehensive claim probably isn't going to be perceived as a risk, right? But even something as simple as towing, tow. I've had carriers say, nope, they can't have towing anymore. I'm taking that away because the frequency factor.
Okay, so we're running out of time. So do you turn the deer claim in or not?
Okay, I'm an insurance agent. The technical rules, you should always notify the carrier of every single loss. I wouldn't turn it in.
Yeah. And that's what we chose to do as well. We said, no, let's not risk this. Keep in mind, we have a brand new driver in the house, 16 years old. The last thing I want to do is start getting into some potential claims down the road. I hope that he has a flawless driving record forever.
Yeah.
But you never know, right? He's still learning.
But body shops everywhere, this is not the same world. Comprehensive losses are charged by some carriers. Quit telling everyone that they're not.
That's right. It's changed.
So I guess the big theme is you're not going to call a lizard or a very hilarious actor on that represents an insurance company. You want to have an individual, a team in your corner when you have questions like this, or when you start that side business, who you can turn to and say, hey, this is what's going on. What do we do with it? So, Alysia, I appreciate you and appreciate you being on this on the show today. So that's all the time we have for today. On behalf of Alysia, Josh, all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.